Today, we will talk about the Low-Income Housing Tax Credit, LIHTC, and how it benefits low-income individuals and families. The Low-Income Housing Tax Credit is a tax credit designed to encourage developers to build, purchase, or renovate housing for low-income individuals and families. The LIHTC provides around $9 billion annually in federal tax credits to state and local agencies. Developers can reduce their federal income tax owed by $1 for every dollar of tax credit received. The amount of tax credits available to each developer is determined by the number of low-income housing units planned to be built. Applicants must find eligible tax credit properties and typically need to earn an income of less than 60% of the area median income, AMI. The LIHTC is intended to stimulate the creation of more affordable housing for low and middle-income families. There are two main types of federal tax credits available to developers: a 9% credit, which can only be used if the building project will have no other credits or government subsidies applied to it, and a 4% credit, which can be used in conjunction with additional tax credits. These credits are applied over a 10-year period and can cover almost the entirety of the taxable expense for the building. Projects receiving the LIHTC must continue to meet specific income conditions for a period of 15 years in order to maintain eligibility for the tax credit. A wide variety of properties can be eligible for the LIHTC, including single-family homes, duplexes, apartment complexes, and townhouses. Property owners, investors, or developers must meet specific requirements regarding the income levels of their tenants and the rents they charge. A project must meet one of the three income tests and continue to meet these income conditions for a period of 15 years. There are other types of support available for low-income individuals and households, such as housing subsidies provided by the Department of Housing and Urban Development. Low-income housing refers to any housing project or residential building that rents units to tenants who qualify for reduced rent based on income. Low-income housing can be operated by a housing authority or private landlords who accept government payments. Housing subsidies provided by HUD are available to single renters and families, but there are qualifications for room counts in prospective homes, and single renters may be excluded from a housing project due to lack of availability of properly sized units. Here are three key takeaways. 1. The LIHTC is intended to encourage the development of affordable housing by offering a 10-year tax credit to these projects. 2. Most kinds of properties, single-family, multifamily, apartment complexes, and townhouses, can qualify for the LIHTC credit. 3. An LIHTC housing project must agree to rent to tenants whose average income is below the area's median income, and this commitment must be maintained for a period of 15 years. Hope this would help. Thanks for watching.